Welcome to weekly view on markets. On Friday, Nifty closed at 18,496 with a loss of 1.07%. Due to RBI MPC meeting and also upcoming US Fed meeting, the markets were little nervous during this week. Bank Nifty closed at 43,633 with a gain of 1.23%. I have been maintaining over last few weeks that banks and financials will outperform the market, and especially the public sector banks have been doing very well over last few weeks. Nifty mid cap index closed at 32,374 with a minor loss of 0.59%. Small cap index closed with a loss of about 1.09%. India VIX has remained steady at around 13.47. There is not much change. Now let us look at different sectors of the market. PSU banks continued their uptrend and closed with a gain of 4.77%. Due to the improved fundamentals and the asset quality of PSU banks, and also the outlook in higher earnings has resulted in a re-rating of PSU banks. So we have been seeing a good rally in PSU banks. FMCG closed with a gain of 2.23%. Private banks closed with a gain of 0.82%. Consumption sector also gained about 0.07. Many sectors were in the red during the week. Information technology lost about 6.07%. Realty sector lost about 3.41%. Pharma closed with a loss of 2.39%. Consumer durables closed with a loss of more than 2%. Auto also closed with a loss of 1.36%. So RBI MPC meeting was held during this week, where RBI raised interest rates by 35 basis points, that is by 0.35%. The rate sensitive sectors started declining as housing loans, auto loans, all these are going to be at a higher rate in the coming weeks. So because of this, the rate sensitive sectors corrected in the market. Now let us look at Nifty chart. This is the daily chart of Nifty. Nifty has started a corrective move after touching a high of around 18,890. And this week we have seen a bit of correction in Nifty. But this correction and profit booking was expected at higher levels. And investors should not get too much worried about this correction. The markets may correct for a few more days as there is US Fed meeting in the next week. And after the US Fed meeting, I feel the market should again start the up move. And market has support at around 18,200 level. This is what I have shown on the support line. So 18,200 seems to be a good support at this point of time for the markets. And uh, any dip in the market is a good buying opportunity. So Indian economic macroeconomic fundamentals looks very good. So any dip due to some global news and other things will give a excellent opportunity for investors to buy into the dips. And overall trend of the market remains up. So let us look at Nifty mid cap index. This is Nifty mid cap index. The mid cap index is consolidating after a good up move from around 31,000 level to 32,000 levels. So this is quite normal, and there is no damage to the chart structure in a longer frame period. So I have bullish view on Nifty mid cap. Let us look at Nifty small cap. This is a Nifty small cap chart on a longer time frame, as long as Nifty is maintaining about 9,500 levels, my view remains bullish on Nifty small cap index chart also. So any small dip for 3 days, 5 days, or 1 week will give an opportunity for buyers to buy good stocks at these levels. The long-term structure of the charts of Nifty mid cap index, Nifty small cap index, all remains quite positive. So now let us look at some of the fundamentals of the market. I had provided a lot of data points for macroeconomic situation in India last week. So services PMI index for November has come at 56.4 from earlier month of 55.1. So this is showing a expansion in service sector activity, especially in travel, tourism, and hotel industry. India to be the major Apple manufacturing hub. The Apple is going to set up a major manufacturing hub in India with 41,000 crore investment. So this is a big boost. Recently, during this week, the Commerce and Industry Minister has announced a national single window clearance system for all approvals for different businesses and projects. Getting different approvals for projects or companies is a big hurdle, and it is a big barrier for many new business and for the projects. So this single window clearance system, national single window clearance system, is going to be a big booster for the businesses in the coming years. During the RBI meeting recently, they have raised interest rate by 0.35%, and this rate hike was already expected by the streets. So it is as per the street estimates. There is no much adverse reaction on the day of interest rate announcement by RBI. RBI has maintained its policy stance as withdrawal of accommodation. What is the meaning of withdrawal of accommodation is that during COVID period, RBI has infused lot of liquidity into the financial system. Now they are trying to withdraw that liquidity from the system through various measures. That is what they have been calling as withdrawal of accommodation. That means the liquidity from the market is being reduced by RBI through various financial instruments. One another good thing is that RBI forex reserves has risen to 561 billion US dollars during this week. Last month we had seen a dip, but with the oil prices coming down and the import bill coming up, we are seeing a recovery in the forex reserves of RBI during this week. RBI has reduced the GDP forecast for the full year, that is 2022-23, at 6.8% from 7%. This is due to several global uncertainties, that is inflation in US, inflation in UK and other countries, and also the uncertainty due to the Russia-Ukraine conflicts. So based on these factors, RBI has reduced GDP growth from 7 to 6.8%. But still, 6.8% is one of the good growth for Indian economy among the largest economies of the world. Market is a bit nervous before the US Fed meeting, which is scheduled on 13th and 14th during the next week. Market will eagerly await the outcome and also the future policy guidance from US Fed meeting. Ahead of RBI, this US Fed meeting, uh, FIIs have sold 5,655 crores in this month, in last 10 days. and DII have brought around 7086 crores in the month of December till 9th. So there is a lot of retail investors money that is coming into the market through SIP investments, through mutual funds. So this is what is supporting the Indian market. Even though FIIs are selling, we are not seeing that kind of crash or big dip in the Indian markets, as it is supported by retail investors' money coming into the market through mutual funds. So any dip like this due to some global news or some policy announcement by US, it gives an excellent opportunity for investors to buy into the dips in Indian markets. The charts also show that buying interest at lower levels, the chart structures, I had explained earlier in many weeks time, any dip is being bought into by the informed investors that we can see on the charts. Please keep investing regularly and keep your investment horizon at least for 2 to 3 years or more. You will make a lot of money from the markets. This is all for this week. So if you like my video, please share with your friends, give your comments, and also you can post your questions, which I will reply. So we'll meet again next week. Thank you.